End of the quarter, end of the week. How often do we talk about the market closing at the extremes on a Friday and I guess at the end of the quarter? Above all-time highs right now, S&Ps. We'll see if the PCE shake things up a little bit. Nike, holy mackerel, disaster. Bringing down some other shoe stocks. There's probably a few other things that you guys want to talk about. 810. Hayden Buckfire, star reporter, star writer for Benzinga, comes on to give us his views on the markets this summer. Let's get pre-market prep started.
Welcome to Benzinga's pre-market prep.
This is a volatile puppy here.
It's all about execution styles and strategies.
Okay, traders and investors, we had a strong close. You know what that means. A strong open. Never saw that closing price. 88.75. Is that our all-time high? Yeah, folks, that's only 24 handles away. As I said, PCE might have something to do with that. Buck flat, 105.06. TLT down slightly, 23 cents, 93.23, 93.29, but holding in there. Crude, not over 80, not over 81, over 82, up 44 cents at 82.18. Gold up $9, 23.45, 80, kind of consolidating, trying to get through that 23.50 level. Silver perking up 40 cents, 29.66, and a subdued Bitcoin up $210 at 62,055. We got a big show today. We'll bring in Dennis. We'll bring in Aaron. And we are going to stay on track on this Friday on the end of the quarter.
How are we doing this morning, Joel?
I'm doing well.
What's up?
Well, we've got some things to talk about today. Of course, last night, the debate everyone was watching. I don't know if we want to start there. We want to go to let's start with Nike earnings. Let's ease into the debate talk, since that might get a little controversial. But Nike reported earnings yesterday, and as a lot of people expected, it seemed like no one was bullish going into this report for Nike, and the report was not great. I'm pulling up those numbers right now. And as you mentioned, bringing down some other shoe stocks this morning as well. So Nike, wow, down 12% now. So the numbers came out yesterday after the close. EPS 99 cents, which actually beat the 84-cent estimate, but sales missed 12.6 billion against 12.9 billion. And then we had inventories at 7.5 billion. Guidance not great. Stock getting absolutely crushed this morning, down 12 or 13%. Oh no, that might have been one of the 8 o'clock prints. 12% this morning.
It's down almost 15%. The 8 o'clock prints are brutal, man. Tangent, I just can't even stand it. Figure out a better way to do it. Okay, they got to go for 5-6 minutes. These are all your prints from Robinhood last night, all your prints from IB after hours, and it's just brutal changing the market here. We are $80.15. You think the thing's trading rapidly? It's not trading at all. These are all just the trade dumps there. It changes your last and makes the stocks all look stupid on the charts. Not right. FINRA, ignore it. It's not even trading right now. It's traded it's just made one real trade a second ago, even though it looks like it's trading 1,000 trades right now. Disaster. I mean, it's a disaster. They're lowering guidance. This is just, we have the tale of two markets. You have old school, stocks, that are stumbling, and, the puns intended there, we used it already. And then you have, the tale of tech, which is all anybody cares about. S&Ps, Nike falls 15%. Retail, a lot of retail stocks trading down. S&Ps couldn't care less. They're rallying up here because, well, it's not a tech stock, so why would we even look at that? I mean, that's where we're at. That's where we're at in this market. It's tech and everything else.
I could give you technicals, but then you thought maybe you get a bounce in Walgreens Boots Alliance. You saw some big bids in the pre-market. You didn't. The thing got pounded. So I'd keep an eye for Nike. Really, the only thing I could give you is the pre-market low. And you are just there. There's still sellers lurking out there. 79.95 is your low, and you're trading at 80.11. Absolutely no bounce yet. So I'll just go to the monthlies. If I had to give you a number, if you had to twist my arm in Nike on the monthly, you have to go back all the way until April of 2020, 77.16. I'll give that a 3-star. If you get a chance to buy it down there the first time, it may bounce. I don't know if you're going to get there. That'd be enough. That'd have it down $17 on the session, but 80 is a good number, swing number. I wouldn't want to short it at 80 and then see like the next few prints at like 80, 30, 80, 40, 80, 50. But that's what you're looking at. Nike, it's having an effect on some other stocks too. Dick's Sporting Goods, of course, they sell more than that. That's trading down 424. ON, the darling of Wall Street, that's only down 92 cents. This is an interesting technical formation here. You've been holding 38. If Nike and ON are different companies, just hold $38 and rally. Who else? Under Armour. Well, Under Armour is Under Armour.
Down, but it's always a disaster. Lululemon is now, goes down all the time anyways. It's the new disaster too. I don't know what's turning the Lululemon story around, but this is not going to help Lululemon here today. Lululemon's a chart to look at here too. This looks like it's ready to fall off a cliff again. I know the value investors and the people, contrarians, are looking at this chart saying, yeah, great support back in 2023. It's going to bounce out of here. Lululemon will turn it around. To me, it's been hanging around this 300 level way too long. Looking at that chart on the top right there, Joel, you got a month and a half of hanging out near the lows. Guy Domi wants selling fast money, and Guy Domi's, sometimes says some really awesome things. He's like, they don't give you a chance to buy the bottom for this long. And I'm like, that's a great quote. And I'm like, they don't. When it hangs out near the lows for a month and a half, the accumulation is all there, and it's usually accumulation to screw more people and go lower. I think Lululemon eventually breaks down here once again. The low of the move is 293. I don't know if it's doing it today. I don't know if Nike's got enough to get it, but it is down $5 here on the Nike report here. I'd be very cautious if I was long Lululemon as well. Retail just doesn't look that great.
Before you move on from Lulu, you see my nice little red arrow there, right? Yeah, over that. That.
Oh, yeah, you got to really squint your eyes. I'm old, Joel.
Squinty eyes.
I do see it. Yeah,
I wonder if I can make that.
What was that? What was that?
Oh, come on. You get one guess and one guess only. You're
off earnings?
Yeah.
And they sold it right back down.
Yep.
The relief pop because the earnings weren't as bad as we thought. And when you're buying stocks because the earnings weren't as bad as you thought, that's not a reason to own stocks. So it gets sold right away. Overhead supply we talked about on this one. Once the market starts hating you, it's hard to turn the story around. And the market is now hating on Lulu. It's hated Nike for a very long time. I don't think this is a story that turns around here today. And you just got to say, the laggards continue to lag. If you're a contrarian and saying, yep, I buy them when they're at their lows and I short the stocks that are at the highs, you are getting killed in 2024 because it has been a momentum market. Even though the market itself has had lots of chop and we've seen rotation, keep the S&Ps kind of like where they are for the last little while, even though drifting higher, you can see clearly stocks and downtrends continue to show weakness. Stocks and uptrends continue to show strength. It's a Momo market. Contrarians not having a lot of fun.
All right, well, I do see our special guest of the day hanging out backstage, ready to make his pre-market prep debut, Hayden Buckfire. Without further ado, let's bring Hayden on bright and early this morning. All right, Hayden Buckfire. Hayden, how are you doing this morning?
Great. Thank you, Aaron, for having me on along with Dennis and Joel. It's great to be back on the show.
Yeah, so Hayden is our star intern writer this summer. Been doing some great articles, a lot of which Hayden I've included in my morning newsletter that goes out to a bunch of people every morning. So again, shout out on those articles. Great job. What has been top of mind for you this week? What have you written about?
Of course, I think the big news, of course, has just been this macroeconomic, inflation still a problem, obviously, and of course, still speculation about interest rates and looking at retail, and that's where consumers cut their spending. I mean, it's evidenced by Nike and all these moves. So I think it's definitely pretty interesting going into the summer.
Got it. Are there any specific stocks you're looking to write articles about today or this week that you've written about?
Sure. Not sure about today yet, but definitely been writing a lot about the AI, artificial intelligence, these magnificent five stocks, how much they're outperforming the market. And it looks like there's a lot of momentum on all of their adoptions of artificial intelligence. And I think it's, of course, going to be a test to see if they actually provide value for users. But I think it's looking like it's trending that way. So I'm
Hayden, you're a young investor.
see if there's any.
Hayden, I just want to get your perspective here as a young investor. Me and Joel are kind of getting older. We're getting to words, Now, Joel's well past retirement here at 85 years old. Myself here approaching retirement, probably 10 years away. So not as young as you yet here. But Hayden, you're just starting this career. If you're like building a stock portfolio, and you're like, saying, this is going to be like a 35-year portfolio for myself because you're just getting started here. Which stocks would you put in there? Give us
Which
a couple.
stocks would I put in there?
Give us a couple names that you think are like the next 25, 30 years. Stocks that I would want to hold in my long-term portfolio.
Well, in my own portfolio, I own Walmart and Costco, which have done so well in recent years. And I think those are two great stocks. And I think you also have to look at these semiconductor stocks as well. I mean, they've performed so well, but I think if you really think that this is the future, I think you have at least some exposure to that as well.
What about the chips? So you're saying semiconductors? Like, give us a couple specific names. Are you thinking Nvidia? Is that what you're thinking? What do you have? Stop. You just had two stocks in your portfolio. Do you have other ones in there?
Yeah, I think I do own Nike, which of course hasn't done very well.
Well, maybe I'll turn around. I don't think it's today though.
Yeah, I think it's hard to even say but I think retail, e-commerce with Amazon as well. I think this is a pretty decent bet looking several years into the future.
Well, Hayden, so going back to Nike real quick. I mean, you're a younger guy in college. Is it still? Do people all wear Nikes still? Have you seen more friends starting to wear, the on-ons, starting to wear the Hokas, or do you think like you still see a lot of Nike among young people?
I definitely think they've lost a fair bit of market share since 2021, 2022. I think a lot of people are really more open to breaking from their Nike exclusivity. So I definitely think that the Ons, the Hokas, even Adidas or Under Armour, I think have fared pretty well as of recent. Maybe a little less loyalty to Nike, and also just looking at the market as a whole, I think these luxury brands have done very well, and the brands that are dirt cheap that have done really well as well. And I think this middle ground has been a problem for consumers.
Hayden, you spent your freshman year up there at the University of Michigan taking business school classes here, and now you're doing an internship in the financial markets, writing about them. What what is something that really change your perspective? Seeing the media, writing the articles, seeing the daily news flow. What's been your biggest takeaway so far from your internship?
Of course, I think one of the best parts of PreMarket Prep is just how analytically focused your show is, and I think that's something that has been particularly illuminating as I've written articles, trying to find interesting graphs or data to base my written works on. I think one thing that I've written about has been so interesting is looking at, I think it might have been Goldman that did this, but in an analyst note or something, but looking at the companies that are dependent on Chinese suppliers versus the companies that are dependent on American suppliers. And man, those domestic suppliers have fared so much better over the last 6-8 months. I think that's going to be something that's very interesting to look at going into 2020, end of 2024 and 2025.
What about anything that's kind of disappointed you about that, the markets, or something that you learned that, doesn't, is, set particularly well with you? Learn anything along those lines?
Yeah, I think I've of course worked on editorial writing articles, but I've also shadowed a little bit working on the Benzinga news desk, and it's been very interesting learning about how stocks move, how they respond to news as well. And I think there's plenty of times when there's an explanation on why a stock's doing well or bad, and there's plenty of times when there's not. I think, at least from my understanding, it's getting harder and harder or more and more of the time, it's harder to determine why a stock is moving in a particular way.
Analyst ratings. Do you think they really mean anything, Hayden? I know you cover a lot of analyst notes. I know, like Dennis the other day, there was a buy rating on a stock that he had been owning a long time, and he dumped it. He dumped it off of buy ratings. Do you think analyst ratings are that influential on Wall Street?
Well, I think they might be influential, but I do think maybe I should temper what I'm about to say, because I am currently writing about analyst ratings. But I think there is maybe some sort of groupthink, of some sort of I don't know how constructive a lot of this is in terms of having unique opinions on stocks, and a lot of them are just kind of falling in the same line. I don't know how productive it is.
Hayden, what about in terms of, like, how do you go about picking what you want to write about on any given day? Like, I know a lot of it might be assigned, but are there places you check to see, like, oh, this is an interesting story, or do you pick things up from Twitter? What are your sources for finding topics to write about?
Well, the one thing I do is I do tune into PreMarket Prep every morning and hear what you're all saying, right? Because that's of utmost importance to me. But yeah, I think Twitter is so important right now for the financial markets, and there's so much news going on and so many opinions. It's very interesting to draw from that a lot of the time. I guess it's X now. Apologies. And looking at news as well, and there's plenty of other coverage on Benzinga.com, and a lot of times I'll take an article from a few months ago and write an update. So it's definitely been definitely drawing from a lot of different sources, which I think you have to do more and more in this internet environment.
How do you cut out the noise? Because I go on Twitter and everybody's talking about everything, and like there's just so much noise and spam and people talking their own books here. How do you like cut through the noise? And this isn't even just a stock market question. It seems like a life question now, because everywhere I go, it's just everything is advertising to me everywhere. My cell phone. You drive in your car, you're at the arena with the hockey. I'm at the arena all the time with the kids. I'm just everywhere. It's a clutter, like advertising to me everywhere. How do you cut out the noise?
Yeah, well, I think we talk about the specific skills that are important for each generation. I think for my generation in particular, and future generations, it's going to be such a big key skill, especially with artificial intelligence and just AI generated pictures and videos. Who knows what's going to be true? So I think media literacy in general is going to be one of the most important skills going decades into the future. I think it's just something you build up, finding out what is important, because there is so much noise, and a lot of it is just unimportant. And some of it there might be red herrings, or they might get you distracted. But I think you just have to focus on like what actually matters.
All right, Hayden, one more before we let you go here. You write a lot about different things. You write about stocks, you write about politics, and obviously there was a big political event last night. And if Dustin throws that one at you, a lot of different things to point out. What were your takeaways from the debate?
Of course. I think of any debate or any presidential campaign, there's two really important things. One is riling up your own base, right? Making sure your voters want to vote for you. And two, appealing to the undecided voters, right? The swing voters, people who are picking between the two candidates. I don't think Biden did either of those things last night. I don't think anyone would disagree with me. And you're looking forward to the election. I think the Democrats have such a razor tight coalition. I don't know if the winning coalition is still there. So I wonder what the conversations are going on in the DNC. Are they looking to move on from Biden? Are they looking to maybe go towards a governor, maybe even someone completely out of politics? I think it'll be very interesting to look at over the next few months before the convention. And I think it can definitely impact the markets.
Volatility, right? Volatility. That's what we all want.
Well, Hayden, this has been awesome to get you on PreMarket Prep for the first time. We're going to have to get you on again and, You've been doing a great job on the articles, been enjoying reading them. So we'll continue watching out for the Hayden Buckfire articles because when you read those, you're going to get some good work. So Hayden, enjoy the rest of your Friday morning and we'll catch up soon.
Thank you, Aaron. Thank you, guys.
Of course.
Thanks, Hayden.
All right, there you go. That was Hayden Buckfire, Benzinga star intern, making his pre-market prep debut. Smash the like for Hayden. All right, let's.
Hayden opened the door to the debate discussion. We have to do the debate discussion.
Yeah, we do. Well, I was going to say one more thing on Nike before we moved on, because someone in the chat asked something about could Nike be a prelude for Apple, which sounds, obviously very different sectors, and we're talking more about other shoe companies, but Nike did mention very, weakness in China as one of the driving factors for lower growth. So if you try to extrapolate that and say, well, if Nike sales weren't doing great in China, maybe Apple sales aren't going to be great in China. So I don't know if there are other stocks Apple's trading up this morning, but I don't know if there are other stocks with Chinese exposure that are also getting hit this morning on the Nike report.
I think the Nike issue is a Nike issue.
Not a China issue.
I don't think the market's even reading farther that, oh my goodness, China's slowing here. China, they don't even care about China. I mean, China's been actually rallying and never rallies. It's actually up today. So I don't think it's an issue that, they're going to extrapolate into Apple. I don't think it's an issue they're going to extrapolate further. I think the Nike issues are Nike issues. So debate. I want to talk, before we get the PC, let's get like a 5-minute talk on the debate. I watched the whole thing. It was the worst 90 minutes, the most painful 90 minutes in a long time for me. I'll never get those 90 minutes back. Both candidates just obviously Biden has struggles putting sentences together and keeping his train of thought, which is just ridiculous that, we're thinking he can do another 4 years. And Trump, they ask him a question and he answers a different question. He's going off over here too. I'm like, it was just two candidates that I feel like this is the best we could do in 4 years. This is what they came up with, is a Trump versus Biden. You got somebody who honestly doesn't look fit to be president and another person who, it's Trump. I mean, it's Trump again. So I don't know. I don't even know what to say on it. The debate was terrible. It was terrible television. I mean, it had its moments where it were funny when Trump probably had the moment when Biden literally forgot what he was talking about. And then Trump says, well, I don't know if he knew what he said in that last sentence, and I don't know what he said either. I mean, that was probably the funniest moment of the thing and probably the most truthful moment. But it was sad to see Biden in that condition. I don't think we realized how bad he is if he's got dementia and whatever he has. But, he doesn't look fit to be the president. And I think the markets are telling us that. Obviously, I believe Trump went up 12 or 13 points last night. DJT is rallying on this. So those are my initial thoughts. I thought that was a disaster for Biden. Trump clearly won just because Biden was struggling to keep his train of thought. Terrible. And they're saying he had a cold. They're making so many excuses for him. I mean, it didn't look like he had a cold to me. He looked like he had dementia. Sorry, that's my thoughts.
Yeah, I mean, the one funny part, for both candidates was when the moderator would come in after and say, sir, the question was,
the moderators, I'll just put it real easy. I'm still waiting for Biden to finish sentence. I'm still waiting for Trump to answer a question. And two kindergartners could have been better moderators than those people that they had up there. They had absolutely no control over what was going on. It was an utter disaster from every perspective.
It really was.
From Biden, from Trump to the moderators, and there were so many questions. I wish I could have hopped in there for Biden. I wish I could have hopped in there for those moderators, and people would have seen a whole different show, a whole different perspective on things. It was a bit embarrassing to have that on American TV. And
it really was.
Yeah, it really was.
I was embarrassed, and I'm not an American, and I was embarrassed actually watching it. I was like, oh, I'm just cringing and cringing and cringing. And, you're trying to enjoy it. You're trying to find, and then your expectations are so low for Biden after, he got off the really rough start where he forgot his train of thought. Then he's like, well, you made an okay argument there. Like your expectations are so low. I mean, this is going to be the president of the United States. Like this can't be like, okay, well, he got the sentence out straight. I mean, what the hell are they doing? Honestly, I think you got to find, if you're the Dems, I think you got to find another candidate. I know it's late.
That's it.
You got to find another candidate.
Yep.
Because I don't think right now, if you're the Dems and you see that last night, I will say on this show right now, Biden has zero chance to beat Trump. Zero. You might as well concede the election right now. So if you want to beat Trump, if you actually want to beat Trump and you're the Dems, you've got to find a way to get him out right now. Don't play around. You have 6 months here, not even 5 months left. Find another candidate. That's what the Dems have to be thinking.
Well,
well, why would you? Because even before he's elected, the war in Russia is going to be over. The journalist is going to be returned. Also, the war in Israel, it's just going to be over like this. All those things are going to happen even before he's elected. I just don't know why he doesn't go out and just negotiate it now. All those things are going to happen instantaneously. How? We don't know, because he didn't answer any of the questions. He was very well prepared to attack instead of actually get any substance on it. So
there was no substance from either candidate in that entire debate. In 90 minutes, I was like, I'm trying to sum up, in previous debates, you're like, well, this is their policies. This is where they're thinking. This is where they're going. I got nothing. Like somebody asked me, sum up, what they were saying. I was like, I don't know if they had said anything in 90 minutes. I honestly didn't feel like either candidate really said anything. Nothing new. Nothing like, oh, yeah, that's a great idea. None of that. What the hell was that last night? Holy mackerel. And again, Trudeau's no good either. Like obviously we've had Trudeau in there for a lot of years, but holy crap, man, that was just cringeworthy. The whole thing, honestly, was awful.
I think if you're a big Trump supporter or, on that side, you almost wish that Biden would have done a little bit of a better job last night, because that increases his odds of staying in the race. And I think that's a more beatable candidate than a lot of other people than the Democrats could run. To your point, Dennis, this is from the predicted kind of betting markets on politics. So you can see here, Biden was trading at 86 cents on the dollar. This is to be the Democratic nominee. And then after last night, that has dropped down to 60 cents. Gavin Newsom started the night at 8 cents. That has jumped all the way up to 23 cents.
Ooh, nice.
So almost a two-bagger there on Newsom if you bought that before the debate. Kamala Harris has gone up as well. But I think if they do take Biden out, I think Newsom is.
Do they have a field on that? Do they have a field?
Well, yeah, because what you can do is you can buy no. So you can buy the shares for yes, Biden will be the nominee, or no, he won't be the nominee. And you can buy the field essentially at 37 cents on the dollar. If you're right, you basically, 2x your money there. It goes from 37
okay.
to
That's
to
interesting. All right, PCE. PCE.
Yep. PCE. All right, we're going.
I'm going wide. I'm going wide.
Switching topics pretty quickly here. So PCE, these are the expectations. We got that coming in 2 minutes. PCE for May is expected to come in at 0.0%. It was 0.3% last time. PCE year over year, the expectation is 2.6%. It was 2.7% in April. Core PCE is supposed to be at 0.1%. It was 0.2%. So the bar's set. We're looking for a drop in PCE this morning. So, kind of a little bit of a higher bar to clear there on the inflation side there. Again, this is the personal consumption expenditure here, which is they say this is the Fed's favorite gauge.
Yeah, that's what we hear. Yep, that's what we hear.
I don't know.
30 seconds. It's a very important number. I feel like, maybe going to the background, but I'm going to stick with you. If it gets really crazy, I'll probably pop to the background. But I don't know what to say here. I feel like the market wants to rally. I feel like the market,
has rallied.
Well, what it has this morning, I think it's honestly the debate didn't hurt it because Trump's, easier on big business. So I think, Trump leading probably helped the S&P's rally here today. So I do think you're seeing a Trump
steady bid last night. I watched it. It was a steady bid. Very, very.
Yeah, throughout the whole thing. Okay.
Yeah.
Here we go.
All right.
Wide.
Really?
We're a buck wide on the SPY right now. You never
Buck
see
wide
that
on the
wide.
SPY. Looks like it's coming in line or a little bit better. I mean, we did pop up to 73. The data, you early data providers have it, but so far, slight dip under 62. New high of the move, still battling it out. Really not far away from that closing print of the bracket before 66.75. That's what I'm looking at. Looks like they're trying to get a 70 bid here. Some sellers coming in right here, right where we were at. Is it in line? Because of
Yep,
this,
2.6% versus the 2.6% estimated.
there you go.
PCE price index for May came in at 0.0% versus the 0.0% estimated. Literally everything is just coming in exactly in line. Core PCE came in at 0.1% versus the 0.1% estimated. So shout out to all the economists that set these lines per se, because everything is coming in exactly what they set it at. Oh, here we go. Personal spending for May came in at 0.2% versus 0.3% estimated. So that's not the inflation. That's just actual personal spending came in a little bit lighter than expected.
That's good.
So yeah, I mean, across the board, it is showing lower PCE in May than what we had in April, which, you know, not by a lot, but I guess if you're just following the trends, that's a good news that the inflation again seems to be, if not coming down, at least stabilizing, not going up, which is the big thing here.
Any revisions? A lot of times you get whacked. There we go. Little bust sellers coming in a little bit. As I said,
Little bit.
we ended that bracket at 66.75. So that right there, before we had that information, that's where the market was trading. You made a new pre-market high at 55.73. I think if the sellers want to come in here right now, I mean, this is their opportunity right now to come in, or else we're just going to grind higher up to that 55.88. That's the all-time high. If your number on the upside, if you're just looking at the close, the all-time closing high was at 59.75. We are heading towards that number now. The other thing I want to take it to, I mean, the PC, it's more personal. When are all this data? Now we're right where we were before. We're absolutely no new information. There we are. Just hanging 55. So what are you seeing in the stocks, Dennis?
I'm seeing a little bit. I'm actually seeing really nothing, Joel, to be honest with you. We popped a little bit and then we're just pulling back here a little bit now. I hedged up, on this dip here. I just bought some S&P. I just bought some SPY just on this little dip because I was actually a little bit short. So I hedged up my trading account here. It's choppy. I don't think we're in this market, though, to just give it all back here on this number. I don't think the number's that hot at all. Well, give us the number here again, AB, because I'm trying to trade it.
2.6%.
Right on.
First 2.6%. Yeah, right on there.
It's just not new information. So yeah. I think it's a nothing burger. Where were we? This is right where we were prior, Joel?
Yeah, 66.50. Okay. Yep.
So we popped because we weren't hot, and then we're like, well, we weren't cool either, so they sold us back off. I'm just thinking, I think we grind further north here today. I don't see any new information. I do think, and going back to the debate here, that the Trump bump, this is new information. And we know the stock market did very well under Trump. He is easier on big business. He doesn't want to, tax big business as much. So I know you can shake your head at that.
Wait. What's the market done over the last 4 years, Dennis?
Comparatively to the Trump, I believe the market's always up, Joel. So honestly, 4-year period where in the last 20 years where the market goes, we have the financial crisis. So I believe the stats are the Trump that honestly under the Trump administration. So I'm not saying it's Trump. I'm just saying he's easier on big business. I'm not saying it's good. I'm not saying it's bad. I'm not picking. I'm just spitting out facts here that Trump doesn't tax as much. He's not going to hit big business as hard. So I don't think it's a stretch to say that the S&Ps continue to get bid throughout that debate because Trump was winning. So I think, is it good for the overall world? I don't know. But I do think that for big business, Trump is more lenient.
Is that good for the for the consumer, for the middle American or the
probably not.
Probably
not, Joel. Probably not good for middle America. Probably, but
just good for the big business.
The stock market. I'm going to say something really harsh here right now. Stock market doesn't give a shit. Stock market cares about money and big business and making money. That's what the stock market. It doesn't care that little businesses suffer. If it did, if it cared about the little guy, we wouldn't have Amazon and everything just going all-time highs all the time. We think about the poor businesses that Amazon is. Think about how many businesses, small businesses, Amazon has put out of business. You know, you see the companies that are public, but what about the small shops? You just don't see it anymore. You know, downtown cores, little mom and pop shops. It's the way we've gone. Multinational corporations kill small business. It's a main reason why, you know, you can look at IW and the small caps. You know, it's the best gauge that we have versus the mega caps, and that probably doesn't change. So I just think this market is, you know, probably applauding that Trump won last night. Now, again, we don't even know. Like you're saying, the odds just went up, AB, that we could see a potential, you know, what was the odds that we could see a potential that Biden like drops out?
I mean, it's almost like half now. It's like 40%.
That's unbelievable. We're 5 months before the election, and they're actually pricing in the potential.
I honestly think
Biden to drop out.
That's going to be worse. That'll be a worse disaster. Either way, it's a disaster, because if that, then, you know, they're changing hands. I don't think that's ever happened. I think the last time that happened was with Barry Goldwater and Richard Nixon. You know, he just said, dude, we're going to impeach you. You got to drop out. So a lot of different factors there. But the most important factor is, you know, what the market's doing. And right now, we're basically in the same place as we were before that PCE number.
Yep. And I think, you know, this market's trying to find its way here. We lost a little bit of leadership with, you know, the recent sell-off in NVIDIA, Micron, but we picked up leadership elsewhere. And 2 stocks, Amazon, almost touching the 200, didn't quite get there yesterday, but almost there, you know, here again this morning, 199. And then who's going to hit 200 first, Amazon or Tesla? Tesla is over 200 here right now in the pre-market, hasn't hit in the regular session here yet. But you can just see the clear rotation, like where, okay, well, if NVIDIA is not going, what are we buying? They're buying other mega cap trades. I mean, that's just what it is. You know, you got, you know, and is it going to become the Magnificent Seven again? I mean, Hayden calls it the Magnificent Five, which is accurate because it's been those 5 stocks that have really, you know, held up, and Tesla kicked out. Although I'd argue, you know, like, so I don't know who else he was kicking out, because he had the Magnificent Seven before, but, and, you know, Magnificent Six, Magnificent Seven. Is Tesla going to make its way back into the Magnificent Seven? I think so. Let's do some technicals on Tesla. We haven't talked it for a while. You know, somebody was like, my buddy Jeff was messaging me yesterday. He's like, when did Tesla get up to $200? I'm like, it's been a good couple of days for Tesla. It's starting to show life here.
And it has, I mean, if you're just looking for a short-term target here, I know you're not, Dennis. You have a quad of highs right around 205. So there's absolutely nothing up there. I see one close at 202.64, but right there, right up to the quad of highs at 265. So that's what you're looking at for your next daily resistance.
It's just looking, you know, I tweeted 3 days ago, it's looking perky when it's 186. You know, now it's 190, 195, 197, 200. The one issue you have with buying Tesla and chasing Tesla is I think they're going to miss earnings. Like, I don't think the cars are selling that great right now. So, I mean, I'm hoping I'm long Tesla. It may be the largest position in my long-term portfolio. I have to add it up because I have it across different accounts. I have my kids' RESP, my wife's RSP, my RSP. If I add it all up, it's probably maybe the biggest single stock holding, because I have you know, ETFs, but single stock holding in my long-term account. I think it's probably close to it. I don't feel like I have enough Tesla. Honestly, I don't. I feel like, you know, I've been talking about it for a while here. Obviously, took some heat. You know, I was talking about it at 180, went down to 140. I bought more at 160. I bought more at 170. I bought more at 180. I've bought this multiple times. I feel like this is going to be the stock 2 years from now that everybody is talking about.
How do you balance like the, you know, your fear about the recession and the economy?
This is a tough
and big ticket items that, you know, I asked you
exactly.
about, yeah. I mean, how do you balance that?
It's difficult. So not saying recession, but big ticket stuff isn't selling. EVs aren't selling as well. I do think Tesla may miss earnings. I actually think that they may miss their numbers, and the stock could get hit like $20 on that, maybe more. But I think it would be an awesome buying opportunity because I think it's going to bounce right back because they got the revenue streams coming. I do think full self-drive robotaxis, we've talked about this, and the market right now is starting to believe it. It hasn't believed it for 3-4 months. Like, now Tesla, not an AI company, it's a car company. Cars aren't selling that well. Move on. Tesla Q coming back in my feed. People saying, "Oh, it's going to go bankrupt," which they don't know what they're talking about. There's so no debt and so much cash now. But you just look here. It's the core business isn't doing that well right now, and it's not the core business. It's pretty much the only business right now for Tesla. But what's coming? Full self-drive, robotaxis, humanoids. He's tweeting about a cell phone. He tweeted. I mean, I don't know if they're going to do it, but there's a non-zero probability that he actually could. He actually tweeted out and asked, "Would you buy a cell phone, a Tesla cell phone, if it had free service through Starlink?" I was like, "Yeah, I would." Free service, just Starlink, just providing.
Hey, watch your
the
bids here,
infrastructure in
Dennis.
there
Just
to actually go at
careful.
Apple too.
Be
What are you
careful.
gonna ask, Joel?
I should say, watch your bids here. I know you had stuff on
Leaking
the
a
line
bit.
there, but yeah, we are leaking here. Nothing major, 5-6 handles, but looks like so far the euphoria from the debate and that PCE number is wearing off a little bit, starting to lose altitude here on this Friday. So far, really good trading action. Now that you're back 13 points off that pre-market high here, going to be a little tougher sledding, I think, to get back to that all-time high that was made at 55.88. But still a lot of time remaining before that opening bell on Wall Street.
And what I love about this even more is everybody, and bring it back to Tesla, because everybody hates Tesla. I tweet something positive about Tesla and they hate it. The chat not having it here either. There's a few people that like Tesla in there, but most of the people like drink the Kool-Aid, drink the Kathy Wood Kool-Aid. Well, you know what, Bears? You're being proven wrong by the market here right now. I'm sorry. I've heard a lot of bad stuff at 170, at 180, at 190, at 200. The stock is quietly up 10, 12% here in the last few weeks. It's starting to perk up.
Maybe everyone just hates your tweets.
I'm averaging around 180, so I'm actually doing okay on this position so far.
Maybe everyone just hates your tweets. Maybe it's not.
No, I'm just talking on the Twitter.
I think Tesla's
I think there's a lot of people who really just despise Elon Musk and want to see him fail. I think that's what it really boils down to, not in our chat, but on Twitter. I think there's a lot of people who really despise him, that they're like, this guy just says the worst things. He doesn't treat women well. He doesn't treat people well. He had the Jewish comments there a while ago. I mean, there's a lot of people that absolutely just despise this guy, and they want to see him fail.
Well, it's polarizing. There are so many people that absolutely love him, though, and there's so many people that absolutely love the Tesla stock. I don't think you can say, at least among retail investors, it's one of the most hated stocks because I think among retail investors, it's one of the most loved stocks. If you looked at like the numbers of what retail investors are investing in, Tesla's always on the top of the list. Here at Benzinga, Tesla is every single day in our top 5 most read tickers because that's what people, I think it's just Elon Musk's nature, almost in a Trump way, becomes very polarizing to where, to your point, Dennis, people either love him or hate him. So when you tweet something good about it, it might bring those Tesla haters out of there. If I tweeted something bad today about Tesla and Elon Musk, I'm sure it would bring out the Elon Musk fanboys.
Haters no matter what.
It brings out the haters no matter what. They'll hate you too.
Yeah.
They're just hiding.
But all right, let's move on from Tesla. We do have some other stocks moving. I mean, we might as well. We talked the debate, and we don't have to go back to the debate, but we might as well bring up DJT's chart this morning and see how that's trading, because a lot of people did have trades on this going into the debate. We were up this morning on DJT, about 10% the last time I checked, about 8% now, $2.80. I'm honestly surprised that that's not up more, just because A, the way the debate went last night, and B, the amount of attention now that is just, every that's top of mind for everyone this morning now after the debate. So I'm a little bit surprised to see this not up a little bit more.
It's been wild trading this DJT. So on the debate, I was just watching. It started actually before the debate. They hit it in the 8 o'clock print. They got nervous going into it, Joel, and they knocked it down to 36.
I see it. Yeah.
And then the debate started. And as soon as he stuttered, as soon as Biden lost his train of thought, DJT went to blast off mode. And I mean, it really blasted off. You can't see that trading last night because it's on
'cause
the
it was
after hours Robinhood session.
right.
But, at like 8:10, 8:15, DJT just blast off, went up to $42, I believe. And then for whatever reason, towards the end, they started selling it off. You won't see this on the charts, but it actually went back to like 37, all the way back to going red. It actually went red.
Really? How
Yeah,
late
it
was
went
that?
red near the end of the debate. It actually went all the way red, and they're like, "Well, I don't know." Like Biden did better towards the end of the debate than he did at the beginning of the debate. But then they realized after, Biden clearly lost a Trump stock, and then they started buying DJT overnight again. And obviously, you can see in the pre-market session, the stock has been wild as well. I mean, this is the direct play on the debate. This is a direct play on Trump. Again, I'm not going to invest in this thing because there's just no value to it. But I mean, if you're a trader, this is a great way to trade the debate.
Any technicals here, Joel, you want to go to?
Wow, we're way off that pre-market high that was made at $43. I mean, trading up $3 on the session. I think you just got to do a reset. Look at yesterday's high. Not like technicals mean anything on this one. 40.54 was your high in yesterday's session, and then I see a pair of highs up to, I'd say, 41.30. So forget about that pre-market high right now. If you're looking for a target, first things, let's clear the previous day's high. And then let's see if you can challenge the pair of highs from June 12th and June 13th, 41.24, 41.36. So that wasn't too long ago. But there's another factor that we got to talk about here, Dennis, with DJT, and something that's happening today, a very important thing that's happening with the Russell rebalance.
Yeah, and this obviously is always a move, always has major moves on the close here. So Russell rebalance, Russell reconstitution at the close of today. There's stocks going into the index, there's stocks coming out of the index. I've got sheets here, man. So this is the Russell 3000. There's 5 sheets of ads here. Again, a lot of these are smaller companies because the Russell's smaller. So, but there is some notable ones in here too, like I've just circled, like Dell is going into the Russell 3000. Dutch Bros, that's a widely traded stock here and talked about in the chat, BROS, going into the 3000. I'm just throwing out some notables here. People like trading that Mind Medicine. It's MNMD. That's going in here. Money Lion. I'm just looking, some names. Rumble or MBL is going in. I don't know if that's still.
Yep.
I'm just looking through the names. A lot of these you're never going to hear of because it's all small caps, right? Rig, Transocean, DJT. DJT is going into the Russell 3000. Trump Media here is going into the Russell 3000. And then, deletes. We're looking at deletes here. Big Lots. Oh, gosh, Big Lots. What a disaster that stock has been. You think about the disasters, those are the ones that are coming out. Remember 23andMe, the genetic testing? That's coming out, ME.
What's the symbol on that one?
ME, 23andMe.
Really?
Nikola's coming out. Sorry, Nikola, you're falling out of the Russell 3000 here. NKLA. Just cherry picking a few names that I see on this list. And you can just Google Russell reconstitution, go to the actual Russell site. You can print out, the ads and the deletes. And these are stocks that could typically get big moves off the close. Now, again, remember, just because they're getting deleted doesn't necessarily mean that they're going to go down on the close. Sometimes these trades get crowded, oversubscribed to. I've seen years where the deletes all go up and the ads all go down on the close. Just because they got oversubscribed to, they got crowded. So how I typically approach it is I fade the closing print. So if you see a big stock or a small cap stock up and down, 6-7% on the closing print, I will buy the close, try to flip it out after hours, or try to flip it out Monday. So, because a lot of times what you see is those moves retrace. It's like the institution's got to sell, they got to buy, and sometimes when they got to do something, it's good to be on the opposite side of that. Workhorse going out, WW Weight Watchers. Oh gosh, that's a disaster story too. That's going out as well. I think they changed the name. I don't think they call it Weight Watchers anymore. And then you've got the micro cap index as well. These get really small names. If you thought those names were small, now you go into the really small names. I'm just looking at the ads to see if I know any of these names here that are jumping out at me. And there's just a lot of names on here. Inseego, INSG, iRobot, IRBT, going in the microcap index. Just,
What's going in? iRobot?
iRobot, yeah.
It's going into something?
Yeah.
Holy mackerel. Des, how many orders you gonna put out?
I typically have these lists, and I typically put closing LOC orders on a lot of these stocks. What I often do too is look at the imbalances that they're giving me, and then again just fade. Like I put, so a LOC order is a limit on close order. So it executes on the close or it cancels. It doesn't execute. So stock we have now, you can put like a $5 bid, for LOC. The stock we trading $4.75, your order won't execute because it's executing on the close, and the closing print has to be below your $5. So it could go $4.75, go 5.10 close, you won't get it. So you say, well, why wouldn't I do that? Well, because I want the closing print. I don't want to buy it at 5, then it gaps down to 4.60. I'm like, oh crap, I was too early. So that's the main reason why I do everything on LOCs on the closing print. So this is just how I approach it. Other people have positions. You'll have portfolio managers that are buying the ads ahead of time and selling the leads ahead of time, hoping for that there's actually some follow through, some tracing, but I think it's more, it's been such a random walk that the safest way I feel like to play it is just to fade the closing prints. And again, nothing works 100% of the time. Maybe you're going to buy a delete that gaps down 5% of the close and it goes down another 5% after. I mean, that can happen, but it usually doesn't. So all I do is play the odds.
And some of it has to do with its weighting in the index that it's coming out of too, right?
Yeah, for sure. I mean, sometimes you go into one and come into the other, and that can change things as well. So, but this is just the way to approach. I mean, there's literally, I'm talking on the micro caps, and in between all the ads and all the deletes, I got about 12 sheets of ads and 12 sheets of deletes. I didn't add up the numbers, but if we just ballpark it, 3, 6, 9, 12, 15, 20, probably 50 on each sheet. So you're talking about 1,000 stocks here that are going to be affected.
Can I make a suggestion for you?
Please.
So after you put your initial orders in,
yes.
Okay. Turn off the algorithm.
The automation. I know.
I
haven't told that story in a long
time.
Tell
that one real quick. That's a good one.
I'll give you the Coles notes. It's a 20-minute story, but I used to run a lot. I used to do a lot of algorithmic trading. Back in 2004, 2005, 2006, before high frequency traders took over the world. I was like one of your original high frequency traders. I had a system that traded automated, sent thousands of orders. So anyways, it would just literally buy, all the stocks that showed up with big buy imbalances and short all the stocks that have big sell imbalances. And then the system would just do that. Well, the system, I had the system running and it did about 200 to 300 trades in 2 seconds. And I'm like, oh man, I'm long short all this stuff. But the issue was, I was heading on a trip to Europe the next morning. And I had so many positions on. I was like, oh my gosh, I've got to work out of all this stuff here, because I often would automate in and manual out. So I can always use automation to get out too, but I was like, I'm just too big. I got to start getting out of this stuff. And then I'm looking and I'm like, I thought I just sold that stock and it's back in my account. What the hell is going on here? And what I did was I had my automation running and I minimized the program. I thought I shut the program off, but I had a minimize button on it and I minimized it. And it was running in the background. So I'm like, oh my gosh, my system's still running. It's still buying and shorting stocks. That's so many positions on, so many positions. Actually, miraculously, I didn't get too harmed on that, but I did some volume that day. I'll tell you that much. Went to Europe and I hedged myself out and I had to trade out of, my wife is like, why do you got to trade on our trip? I was like, I got so many positions I got stuck with here. I couldn't get out after hours because there's no liquidity in a lot of this crap because it's all small stuff. So I'm like, I got to get out on the open. So on Monday from London, England, 9:30 in the morning, I logged in and then I got out of all my stuff. So moral of the story is, if you're running automation, if you create automated programs, don't put a minimize button on the program. Just it's on or it's off. Don't minimize and have it running in the background and you don't realize it's running. Crazy. That's
I'm just looking at my Benzinga Pro, seeing if we've got any other headlines. We did get an upgrade this morning in AV, or I don't know if it was an upgrade. They reiterated, RBC reiterates outperform, maintains $200 price target.
Like
so Dennis, I assumed you'd like that, trading up $2 this morning on that upgrade. Or actually, again, I don't know if we can call it an upgrade, but reiteration. They reiterated after the earnings drop there. Other stocks making
I love
moves
this
morning.
company. I did sell some before the report because I just got nervous that, I think we put in a short-term top of 220. So I had sold just a piece of it. I'm still holding a core position here, though. So I like this company long-term. I do want to talk the banks eventually, too. So save a little bit of time for the banks.
I'll just say this AVAV, you're getting into the gap area, strong rebound after the low. So no clear, if you're, a lot of people are probably playing this up to 192.77. And if you're going with the upgrade, you thought the washout with yesterday, it should hold the high and the close, 78.59 and 77.91.
So the banks. So we had the stress tests come out. They all passed on Wednesday. Their capital their capital return policies or dividends and buybacks can start Friday night. I don't know if we're going to see any announced Friday night, but I'm probably going to take a shot on a few. Like JP Morgan is going to be good to go, I think. Citigroup, I think, is going to be good to go. Goldman, they hit on it. I don't know why. Maybe they thought, that they're not as much, that they didn't do as well as they thought they would. So Goldman was actually down yesterday after their stress test results, which spooks me a little bit. But I think I'm going to be playing at least JP Morgan, a few of these banks, probably taking them long into the weekend in hopes that maybe they announce a buyback. Maybe they announce a dividend increase Friday night. I think it might come Monday, though, too. So Friday night is the first night that they're allowed, that they can actually do buybacks and dividends, but I think you're going to see a lot of buybacks and dividends in a lot of the banks here. So I'm actually bullish the banks right now short term because I think these announcements are going to happen sooner than later. They can come as early as Friday night. I'd expect more on Monday night. But again, I'm going to be playing banks from the long side in my trading account for the next few days in anticipation that some buybacks and dividend increases are coming. JP Morgan, my favorite.
Okay, JP Morgan. We'll just do a quick. Back at $200. One of the few banks I picked up. When was that? When did we have when was the world going out of business with the banks? That was back
Like in February 2023 or April.
Yeah, April and May. Yeah, that's when I picked. I'm not looking to sell it anytime soon. Back over 200. All-time high made last month at 205.88. Closed last month at 202.63. But right now, it looked like you got someone piecing out here between 200 and 201. That's just been the trading action over the last since early June. Imbalances, Dennis. We lost some. We had great momentum going this morning. The PCE number is kind of what we wanted, right? Made a new high on the session, but just been not a swoosh down, not a big decline, but makes me more leaning towards the high of the day is in here, Dennis, at 55.73. With anything you're seeing in the cards, selling balance
580,000 to sell. We know why Nike has the big selling balance.
That makes me
earnings. It's a big selling balance. It's gonna grow, folks. It's gonna get bigger. I think. So, so it's gonna be an ugly day for Nike. I don't see it bouncing back. Under Armour has a buy-in balance right now, 448,000. And that is interesting because you would think Under Armour is going to be down. It is trading down. So if Under Armour, for whatever reason, wants to open higher, I will probably short the open. That's the only one I really see jumping out at me like crazy. The imbalances are pretty small. Bank of America, 150,000 to buy. I have a long position in Bank of America as a trade right now. Again, I'm going to be biased to be long the banks going into this Friday close, Monday close. These announcements don't happen during the day. They happen after. So what I'm probably going to be doing is that strategy going back to is buying the close on the banks for the next few nights, hoping, to pick up, and it's all this is, this strategy called news anticipation. It's called news anticipation. You can Google that. I don't know if it's going to be out there, but
it won't come up anywhere.
My name for it is news anticipation. I'm anticipating that there's going to be buybacks and dividends, and I'm anticipating that this market that prices in nothing probably doesn't price this in either. So I think it's a good strategy for the next few days to be long the banks.
If that Nike imbalance that holds up and they sell, I mean, obviously there's stops and stop limits and things. Stop limits are not going to get done, but we're trading at 77.39. You got to go back. This is like you go back to COVID levels. You're going back to April of 2020. So not investment advice, not recommending going long, but if you got a short on in this thing, it's down this much, double the expected average move, and you're coming into a COVID April low at 77.16. Holy mackerel. Maybe you don't go long, maybe you don't, or maybe you don't cover short there, but whew, boy, oh boy, shortening it in the hole there. Nike could be a whippy one too. But and another
I mean,
thing
it's
too
down 15. I mean, am I
yeah,
selling in the hole? Probably not.
no,
But I'm
there's a
not
bid
buying
there.
it. I don't think this is one
Oh,
like this is Micron. If this is Micron down
yeah, different
15%, I'll be
stock.
like, okay, there's an AI story here. This is probably, and the Micron dip was bought yesterday to a certain extent here. I think this could bounce like it could have 79 to 80, 81. I don't think it's coming back to 85. I don't think it's coming back to 90. And I wouldn't be surprised if it just drifts lower. I mean, contrarian investing, may work sometimes, but tell you not lately. And you're buying dips on stocks like Walgreens and Nike thinking, they're going to bounce back eventually. You may have to wait a long time and maybe they don't bounce back at all. I think you've got to be buying storied stocks going forward. What's the story with Walgreens? It isn't good. What's the story with Nike? It isn't good. I don't see a lot of good stories here coming. And again, the market likes a good story. It likes something to look forward to. Let's look forward to 8 or 9% sales declines. Oh, that sounds like fun. The market doesn't want is all about what have you done for me lately? What are you going to do for me in the immediate future? Immediate gratification. There's no immediate gratification in either of these stocks. I think you got to stop picking bottoms in stocks that are just getting hit, that are in downtrends. Brian Shannon,
all right,
great. Don't buy stocks in downtrends.
Abercrombie and Fitch. Haven't been looking at this for a while. Haven't been able to come up with a level. Obviously, no resistance. But for you A&F traders, man, you got to keep eye on this 170 level. That stalked the last 5 lows in a row. So the trend's been up. It's been coming down to support. I just look both ways on that one. Major support, consolidation. If you go with the mantra that hey, it's hanging out here too long. There it is. There's a good look. Use that 170 level in ANF.
And ANF's been, best of breed here, but retail is getting hit here today. So it's difficult to buy any retail stock on retail apocalypse day. You aren't seeing it in the pre-market yet, that they're still like trying to find, XRT is hardly trading. So they're trying to find reasons to like buy stocks here. But with the S&P leaking here, it feels like it's not going to be a good day for retail. So I'm probably laying off all retail bids. Although if you're buying a retail stock, that's probably the one. But I'm not buying any retail stocks today.
All right, real quick before we wrap up, it is past 9 a.m. Just a preview for next week. Of course, on Thursday, the market will be closed for 4th of July. But then on Friday, next Friday, it will be a big labor data day. We will get the U.S. unemployment report, hourly wages, etc. So we'll have some things to talk about next week and some more earnings as well. So, guys, great show today. A lot to talk about between the debate, between Nike's earnings. Shout out to Hayden, who made his pre-market prep debut. So thank you to everyone who tuned in with us this morning. Please smash the like if you haven't already. We will have live trading starting up after this. Joel, who do we have coming on with us on Monday?
We got a quarterly reset. And we got a monthly reset, and you know how those options reset? We had CC Legator talk about it. Well, a person that likes to talk about that's been studying that, observing that for a long time is good old Tim Quast. So Market Structure Monday.
On a Monday. We're getting Tim Quast on a Monday. Throwing it back. All right, guys. Well, again, thank you for tuning in. Dennis, any final thoughts as we head into the open?
Just fade the close on those moves and buying banks. That's where I'm at.
All right, buying banks, putting the
at
money.
The close.
Dennis is putting his money where the money is, at the banks.
The banks.
Yeah, all right, guys. Hope everyone has a great weekend. We will see you again for the shortened week next week. Till then, hope everyone stays green, and we'll see you guys then.